Hey, trade. Oh, I need to put the screen share up. Hey, traders, good morning and welcome to Charts and Coffee. Hope everyone is having a great Tuesday morning. We are cruising into the end of the year. Obviously, we're also cruising into Christmas, and that means we're going to have a lot of sporadic, low volume days, mostly next week. This week, we are not lacking in major events that are likely to be major volatility movers. Are they going to be trend changers? That's always the biggest question, right? Are we going to see significant shifts in the trend? And while that big rollover gap was clearly a end of December trading for the indices into that March contract, it doesn't make it any less bullish. Remember, this is still the S&P. We're just shifting the contract expiration from December to March, which tells us that that next contract is still pretty optimistic about higher highs in the S&P. So if we're looking at the S&P right now, and we know that tomorrow is the FOMC, and we know that on Friday we have options expiration, OPEX is a day to sort of unto itself. It's very contained. It's really not about technical analysis. It's irrelevant of the trend. For one day, it is a conversation about how do the most number of options expire worthless. So actually a really good opportunity for swing entries, especially in those symbols that have trends. But FOMC is a little bit more troubling, and I'll show you why. Because when we take a look at the CME Group's FedWatch tool, there's no question we're getting a cut tomorrow. That's done. This to talk about anything other than that is a distraction because this is baked into the cake. It's expected, it's discounted. However else you want to say that we are expecting a quarter point cut. 2:30 p.m. Eastern, Jerome Powell is going to hit the mic and he's going to get peppered with questions. And this is where it's going to get interesting. The statement is going to be read pretty closely because even though we got the quarter point cut, now it's very much, Janet Jackson, what have you done for me lately? And now, okay, Jerome, you gave us a quarter point cut, but what are you going to do for us next? Right? And this is where on January 29, 81% expectation of a hold. So this is the first time that we don't have at least a 50-50, right? Or a 50-50 or a slight or higher expectation, slight or higher probability of a cut. The 16% down here, almost 16.6, that's the hold, that's the cut. 81% the hold. And then this quirky 2.4% expectation of a hike. Needless to say, there is a lot of confusion, and mostly January is just kind of set down the middle, which is we don't know what's going to happen. And then we have just sort of the concern that we could see a hike, very unlikely, and the much lower probability of a cut. That's why Wednesday is going to be important to the trend. Could we see a more significant pullback if Jerome is going to tap the brakes on the rate cuts? And that is ultimately what we are all looking at. So tomorrow, FOMC, Friday, OPEX. Okay, what about OPEX? How do we look at OPEX? Really easy. This is what we do in the Sector Secrets Mastery. You don't need anything but your charting platforms, option chain. And I'm going to show you what an example of my option chain looks like. Okay. When I am teaching traders how to enter their trades, I am 0.000% in any way interested, relying on, even noting what any kind of Greek is doing. This is a Greek-free zone. I love my Greek yogurt. Love it. But I do not use Greeks in my options trading. Love Greek food. We have one in town that was highlighted on Bobby Flay's show. Good food, nothing on my option chain. Bid, ask, last, open interest. And sometimes I'll put in volume. There are 4 things that matter to me most when I'm looking at the option chain. Bid, where the buyers are at, ask, where the sellers are at, and last, where they decide to do the deal. That's where they decide that The buyers are going to get their way, the sellers are going to get their way, or they meet somewhere in the middle. Open interest tells me how many contracts are in that chain, either cumulatively or at specific strikes. It's the specific strike that gets really interesting. And so if you're wondering, do I use max pain? I don't. Max pain is fine. I don't use it. Here's why. Max pain insinuates that one level is the magic level, and it just isn't. Think about it. There's a 55, there's a 57 and a half, and there's a 60 strike with a lot of open interest. If you sold calls, right? Now, this is about the selling side. This is what OPEX is all about. If you sold calls, what do you want that option to be worth on Friday? Zero, right? Zilch, a big cup of nothing. That's what you want, right? So where would price have to close in order for that to be true? All right, so the folks who wrote at 55 would love it to close at 55 or below. The folks who wrote the 57 and a half calls would love to be at, 57.49, literally, or below, right? But what if you could close below 60, right? Okay, so now these are worthless, 60 calls. These are worthless, 57. So this is why I don't like max pain, because I'm going to look to see. Now, if they can't get to below 60, right now, by the way, it's 58. They can't, stay below 60. Maybe they'll get below 57 and a half. Because right now at 58.35, these are moderately valuable. But these things, right, are still really valuable, 55s, because that strike is below current price. So does anyone here think that the likelihood of closing below 57 and a half is high? And if they can, they'll close below 55. My guess is it's going to be somewhere between 57 and 55, 57 and change and 55. If max pain is not your thing, and I don't like max pain, try this. All you need is the option chain, and then look at the open interest and focus on the side with cumulatively the most. There's how I trade OPEX. I mean, it's just that simple. These are interesting things that you learn to do when you have so many OPEXs. I don't know how many quarterly expirations I've gone through in 30 plus years, certainly however many monthly expirations. You see patterns arise, if for no other reason, just the repetitiveness of it, right? There's something valuable about seeing the same thing again and again and again. And it just becomes clear the consistency of the behavior, right? Okay, so that's a really, really easy way to understand it. And if you want more guidance like that around OPEX or around FOMC, around macroeconomics, or simply the trades that we're in right now, come check out what we're doing in the Sector Secrets Mastery. All right. By the way, it's sectorsecrets.com. Hey there, Yee. How are you? Good to see you. Good to see you. Yee is one of our members, one of our wonderful members in the Sector Secrets Mastery, or as I lovingly call it, the Sector Fu Mojo Dojo Trading House. All right, so let's get to it. If you have any particular questions in the Simpler Essentials room or on the YouTubes, let me know. Let's go ahead and keep getting through this this morning's indices. NAS is definitely the index that's firing on most of its cylinders. Semiconductors have had a little bit of a rally, and that was one of the heavier corners of the NAS. So the NAS has 4 cylinders, if you will, in the motor. XLK, XLC, XLY, SMH. SMH is not in any way being led higher by NVIDIA. In fact, NVIDIA is the antithesis of what's happening right now in the NASDAQ. This is such a good example how a high-weighted individual stock with a significant move, this is a $70 move on earnings, can carry the entire sector with it. Gang, if you're looking at the importance of high concentration weighting, if you're wondering what the sector secret is, okay, Rog, what's the secret? It's a not so secret secret. Know the weighting, right? Know the weighting. Know how the individual stock is going to impact the broader sector and then therefore the broader average. And right now, AVGO is just all sorts of parabolic, and it's going to carry SMH higher, and it's going to contribute pretty positively to the NASDAQ. And so right now, the NASDAQ is probably the strongest of the for indices. The other thing that we want to take a look at is, what's going on with the Dow? We're seeing all-time highs in the Nas consistently. We know what that's being driven by. And high concentration weighting means, 4, 5, 6, 10 stocks can drive an entire index. Remember, 10 stocks, the Nas is 10% of that index. It doesn't take much. That's why looking at broader based participation is really not that helpful. Do I need to see, broad-based participation in order for equities to rally? No, not in a high concentration weighted world, not at all. And that's where a lot of traders are looking at indicators that somehow suggest that broad participation matters. It doesn't. Never has most, and I would say 90% of the overall stocks meant less, because there's a very small number of stocks that are weighted so heavily that they're pretty much dictating what's happening. That's why the Magnificent Seven are called the Magnificent Seven. It's not because they're magnificent per se, they're just high concentration weighted. Speaking of, Apple's been on a tear lately. It's finally woken up. XLK is going to benefit from that. This is that sector where you've got NVIDIA, Apple, and Microsoft. Here's the irony, and this happens, and it's so funny. XLK, in an attempt and XLK is a business. It's not just an ETF. It's a company who has this ETF, and they want you to trade it. They want you to buy it. They make fees from it. I don't blame them. It's something insidious about it. But here's what's hilarious. You remember all the brouhaha about NVIDIA being added to the XLK and how they were going to minimize the weighting of Apple and increase the weighting of NVIDIA? That is almost always a top in the stock, because these adjustments are only happening after the fact. It reminds me of, and I don't even know if they still do it, when Money Magazine used to say the 10 best places to live. What do I move every year? And isn't it peak whatever, right? Isn't it peak whatever by the time, it's on the list? So I kind of look at the irony now of XLK adding NVIDIA, and then Apple says, hold my beer, right? Or hold my espresso. And off it goes. And they've reduced the weighting of Apple in the XLK. Nonetheless, it's still high concentration weighted, but now NVIDIA is actually dragging the XLK a little bit, where the other two high concentration weighted names, Microsoft and Apple, have to overcome the lagginess in NVIDIA. So I think that's pretty funny. Then again, I'm a little bit of a market geek, but I think that's hilarious. All right, so let's get, let's see here. Roy is asking, where do you get the alerts? Roy, Yi is a member of the Sector Secrets Mastery. So for those of you that are wondering, Rag, where do, you've been sharing your trades in the recaps, and I share these in even the free videos. These are the trades that I have open. Now, let me make this super clear, because I think on Friday's video, a couple of folks said, Rag, when did you get into Wells Fargo? Because I'm looking at the 62.5 calls. See how I have the entry? This was the day before the election, right? This is the day before the election. And the next thing we did, we scaled out at 370, and then we scaled out at 1080. And I'm going to have to close this trade out this week. So these are open trades, right? I don't have the dates. I don't know. If I keep adding more detail, these things are going to turn pretty big into really big descriptions. But yeah, one thing that might be kind of cool is maybe to add a date. But here's the thing. I don't need to do that, because these are the things that go out to the Sector Secrets Mastery folks every day. Like we say, every day, right? Every entry, every exit. So if you're looking at this list and saying, okay, Rag, this is what you've got. I didn't build these yesterday, right? Most of these, our newest swing as of Monday was telephone, right? Our newest close trade as of yesterday, Monday, was Cisco. And then these have all been open for anywhere from, in some cases over a month and a half, like Wells, even Amazon. That's a really long-term trade that I'm going to have to close. We have Amazon again, but with a December 27 expiration. So they're all bought on different days. And why do I keep going into Amazon? Gang, Amazon is punching up to all-time highs every week. And here's one thing we should know about retail traders, your average retail trader. If you're listening to my voice, none of you are average retail traders. So when we look at an average retail trader and we look at their behavior, typically what they're going to do is watch television, right? For those of you that aren't watching, that was just a big roll of the eyes. And they're going to hear what's making higher highs, and they're going to get in with the momentum, with the frenzy. As opposed to every day, which is what I know a lot of you do. You build a watch list, and then you wait for a setup, and you manage risk, and you have a target. I'm going to tell you, not 8 and 10 traders do that. They just don't. Your average retail trader is just going to buy high and then hope it goes higher. And that's fine if we have a year like 2020. That's fine if we have a quarter like the first quarter of this year. Otherwise, from a risk-reward basis, dip buying is going to outperform buying into higher highs. Yet, I know the vast majority of participants can't help themselves. They're going to continue to buy into higher highs. And that's why we've been really pushing Amazon just right into when that option is going to expire. So you can see what we've got there. All right. Question on JETS. Sure. There are a number of, so this is the JETS ETF. Let me move the clock out of the way. This is a JETS ETF. And Jas asks, how do you like Dallas? How do you like Delta Airlines? Not at all. Not at all. So this is something we've talked about a lot in the last handful of weeks. I love JETS, right? But SkyWest, DAL, AC, ASTG, Booking even. But you mentioned specifically DAL, not at all. No, it's shifted in terms of the structure of that daily time frame. So of all the symbols I could trade here, it's actually easier to say which ones I wouldn't. DAL and Sky are the top of I wouldn't. After that comes AC, ASTG, and Booking. And then I would also say no thank you to SNCY and JetBlue. By looking at the green trend, I know it has the probability of moving higher after a pullback. That's really it. So DAL, no thank you. Yeah, not at all. All right. So let's see what else we have here. Roy asks, do you mind if I ask what is your win rate? Roy, I'll tell you not only that, but let me tell you why that is an absolute incomplete, I won't say useless, incomplete metric. And everybody wants to know how often do you win, right? I get it. But if you don't mind, let me throw my 2 cents out here. It's really more like a dime. It's a great place to kind of wrap up the conversation. Win rate says of every 10 trades you make, how many of those 10, say, or 100, whatever your sample is, of those 10 trades you make, how many do you win and how many do you lose? So if I lose 4 times and I win 6, that's a 60% win rate. By the way, my average win rate is usually in the mid 60s to the low 70s. But that's actually not even the point, because that's if anyone's touting a high win rate, they are leaving something out. And I promise you this, if you ask them, they're not going to tell you. How big are your losses? 10 trades, 6 winners, let's go 7. 7 winners, 3 losers. I'm going to tell you right now, if those 3 losers, if your average loss is larger than your average gain, you could be losing money, even with a 70% win rate, right? So the win rate is an incomplete. I didn't say wrong. It's an incomplete ask. If you're going to ask anything, right? And we'll talk about this in Q1 because we're going to be doing, by the way, it's just 2 weeks away. We're going to be doing kind of something different in terms of a quarterly mentorship. I don't even want to use the word mentorship, but it's an immersion. It's going to be something for 1 quarter. We're going to onboard traders into the sector fu way of Kung Fu trading. All right. How do you trade in the Sector Secrets Mastery? You know your average winner. You know your average loser. You know your win rate. Even more so, you could dive a little bit deeper. You know your 3 biggest or 5 biggest winners for the month. You know your 5 biggest losers for the month. There always has to be contrast. If we're not, and by the way, it's end of year. So you're going to have all these fools out there talking about all their big trades. Unless they tell you what their biggest losers were, believe me, they're hiding something. So I'm always going to tell you, my average loser is going to be about 25% of the premium that I paid. My risk reward is going to be 25. My typical winner, well, I don't have to. I mean, we talk about these week in and week out. Take a look. In fact, if you're watching this on replay, pause it. These are my open trades right now. Take a look at, okay, Rog, I've got a pretty good idea of what you're making, and I've got a pretty good idea of what you're losing. So whenever you're asking about someone's trading, the easiest thing to ask is, what's your average win size? What's your average loss size? And I promise you, most traders lose bigger than they win. I've observed it for 30 plus years. So the win rate is really incomplete. Win rate, average winner, average loser. All right, I got to go, gang. Thanks as always. I'll see you tomorrow, same time, same station. Be good to each other.